The Bank of Japan may expand emergency loans to help companies weather the slump. Policymakers will be meeting today and tomorrow. And Mike, what are we expecting here? Any kind of a sea change in policy? The BOJ might be expanding emergency lending, maybe even soaking back bonds out of the markets. It sounds very academic and esoteric, but it could have quite an impact on the market.
Well, there's nothing academic about cheap credit. It does help to stimulate the economy. No change, as Susan said, in interest rates, according to all 17 economists that we spoke to. They said 0.1% will continue to be the benchmark rate here in Japan. That may not be enough to help companies cope with the strong yen. The currency rising to a 14-year high, 86.41 against the dollar 2 months ago, cutting exporters' earnings, fueling deflation here in Japan. And last week, the currency headed back above 90 to the dollar. It is hovering around there like helicopter Ben at 90.02 at the moment.
We think the Bank of Japan eventually will sort of get around to doing some more in terms of expansionary policy. They may do something at this meeting. It's not our call. But the big picture is the Bank of Japan has consistently been behind the curve on fighting not inflation, but fighting deflation. And we think that'll probably continue.
One economist who should know what the BOJ is up to is JP Morgan's Masaki Kano. He spent 25 years at the central bank. He says if the yen threatens sentiment and makes deflation worse, the bank will probably expand emergency loans. Last month, December 1st, it announced $111 billion of easy credit. He says if that doesn't work, the bank may buy more bonds, but higher purchases of JGBs may raise concern that the BOJ is financing a government policy of deficit spending. The Nikkei newspaper says after years of debt-fueled spending, Japan is now living on borrowed time. As evidence, it compares credit default swap spreads with other major world economies. CDS spreads indicate the perceived risk of the country defaulting. So the higher the spread, the riskier the debt. Japan's spread 0.8%. If you take a look at US and Germany, they're around 0.3, 0.4. Even China has a narrower spread than Japan at 0.7%. So it's the riskiest country in terms of perceived risk of default. Back to you guys.
What about, I remember years ago, Mike, they were talking about a completely out-of-the-box, completely bombastic way of thinking, and that is the propensity to save in Japan could be the downfall of the country because the people are just so prudent about things. I mean, there's a story about how housewives have an average of like 180,000 US dollars tucked away that the husband doesn't know about or something like that. What about charging people to put money into the bank? Now, that will change consumer behavior, wouldn't it? But nobody talks about this anymore.
You try to get that past the big banks in Japan. Let's charge people to put money in your accounts. You know, it's not going to be very popular.
I guess not. All right.